Now we can move on to US30, recapping the 3rd of March. All the links you could want are in the video description. Let's just go in and put the levels on the chart. So we're going to focus on the New York Open, and I'll just have a look. Anything from the London session that we may need. Like I said, all the links are in the video description. So first, we shall put on the pre-New York, which is here. Pre-New York, half hour later, high volume time. Just a level there. And then we got the New York Open down here, which is where the arrow goes. So there you are. There are your levels for the New York session. London session, we have London Open here. Pre-London up here. And then the mop is all the way up here. There, as you can see, price hit resistance at that mop, which is roughly the same level as the previous day, which is here. So why did price start to go up in the New York session? Now we can just go down. So we go into the pre-New York, which is here, high volume time. They both start pushing towards the downside. And then so you would naturally be looking for a bullish movement. In that scenario, you'd be looking for a liquidity grab, and it's taking the previous day low, which is here, and this is pushing towards the discount buy area, but you a liquidity grab to start buying. But you can see price doesn't push as fast as it should. You'd want it to clear this low before the New York session takes place. So if this was quicker and started pushing down and took this low, it would be a early buy setup with the early buy template, which means you will be buying before the New York Open takes place. But we don't get that. There's not enough momentum towards the downside to take that early buy. It only makes it down to this sort of level around half hour before the New York Open. So what you would do is you would wait. There's no early buy trade. All you have is the New York Open trade today. New York Open takes place here, goes towards the upside, retests the high volume time, and then price starts to drop. Very quick. Let's go down to the smaller time frame so you can see that. So there it is, push towards the upside. So you'd have a sell bias. You might got that sell downwards move. Let's say you didn't. You want things to play out a bit more before you get the move. Then price turns into the real template that is taking place. So this is a New York template. Go to the template video and you'll see what I mean. Where the New York session opens, it pushes down towards a liquidity pool, which are here, these orange lines. And then you get the reversal towards the upside to get the full bullish momentum. So this is a simple push down, take liquidity, and then start buying. Where is that liquidity coming from? You go to the higher time frame. So this is on the 4 hour, and you can see that major liquidity is these previous months lows over here. So this is I don't know off the top of my head, but they are past weekly lows. They might be monthly lows. I would need to go to the daily times frame to see that, and you can see there, yes, you've got the monthly low of January, and you've got, it's not the monthly low of December. So this is a previous monthly low from January. When you go all the way back, you can see it's simply there. There it is. So how would we get into that move? What I do is I go down to the 5 minute, and you look for a clear liquidity grab, and then you look for some sort of just a bullish indication, really. You don't really need much. So price takes these lows, starts to go up. Let's say you took a stop loss hit there. Let's say you entered here, stop loss at the low, price comes down, takes you out. Then you would sit and wait. Price bounces around a bit, then it's using that as resistance. You can see here, resistance. Then price gives you the one more push down. Now you can start to see this is a consolidation. That downwards move is your fake out. So this would be your impulse move up. So as soon as you start to see this impulse candles, you get into the move once again. So let's say you took a buy there, you had a stop loss hit. You then take another buy here, you get into the move. Let's say you entered around here actually. Around there, and then you could have got another move around there too. So you would have, I allow myself to take 3 attempts, so that would be 1 attempt failed, downwards. Let's say you took 2 attempts there, you rushed back in, 2 attempts, and then on the final attempt you got in here. That would be the last one, and that played off for all that upwards movement. By the New York Open, you have to manage your trade, take some partial profits, move your stop loss. Managing your trade is down to you. And then you can see how price continued towards the upside all the way back to the mop area, which is this line here. So as it clears all of them, you can see we also got a retest of those key levels here. So that shows retesting that, and that shows a bullish confirmation towards the upside, just like that. So that would have been a very good day on US30, nice and simple. And as always, you would be sitting on the chart for about an hour and a half, just getting into that move towards the upside, which plays off, and you let it play off over the afternoon, and that clears a nice big chunk of profit to finish the day. You just come back later on and manage your trade. Nice and simple, and that is how you focus your time on the important areas. You just repeat the same thing every day. No more than an hour and a half on the charts around the New York Open, and then most of the time it gives you a nice setup, and that normally happens on US30 most days. Mr. Me, if you've got any questions, hopefully that helps and you're starting to get the hang of this. It's just a simple practice and repeat scenario thing. And you can see yesterday how our sell bias did play out, but we got the bullish move first. So even though our bias was correct, we had to manage our trades by what we saw on the chart. Take care, have a good day, and goodbye.